Welcome to Breaking News to Trading Moves.
Glad to be here. Looking forward to getting into it.
Yeah, so today we are focusing on a stack of financial research notes covering the U.S. beverage sector.
Right. There is a lot going on there right now.
There really is. And the mission for our time together is strictly to break down this one specific merger and acquisition headline involving Brown-Forman.
Mm-hmm.
We want to identify the market winners and losers based entirely on the financial analysis provided in these notes. We're looking at exactly what the financial details tell us about where capital might flow next.
Yeah, and to set the stage, Sazerac is officially exploring a deal for the Jack Daniel's owner, Brown-Forman.
Okay.
And this places Sazerac right in the mix alongside Pernod Ricard, who, was already in talks.
Wait, so multiple players now?
Exactly. So we have two well-capitalized competitors looking at the exact same target.
Before we look at the broader sector, I want to ask about the immediate market reaction to that specific headline.
Sure.
Like, when news breaks that two buyers are actively looking at the same company, how exactly did the market price that in?
Well, the research points to a very rapid repricing. Brown-Forman shares jump as much as 14.9%.
Wow, 14.9.
Yeah, 14.9%. I mean, when multiple bidders enter the conversation, the market just immediately starts pricing in the probability of a competitive auction.
That makes sense.
They are looking at a rare asset, and the market just reacts to the sudden possibility of a premium being paid to secure it.
Right. And that brings us to the broader industry climate. Like, why are multiple buyers chasing this specific company right now?
Yeah, it is a great question.
We have Sazerac and Pernod Ricard both aggressively looking at Brown-Forman. What is the environment actually like for the beverage sector to prompt this kind of urgency?
Well, the sector is fighting a very specific set of headwinds right now, which makes organic growth really difficult.
Okay, like what kind of headwinds?
First, there is slower demand across the board. Consumers simply are not purchasing at the same velocity they were, say, a few years ago.
Right, people are just buying less.
Exactly, which puts pressure on top-line revenue. Second, you have intense cost pressures.
Oh, sure.
Producing, packaging, transporting these products, it has all become much more expensive, and that just compresses profit margins.
Okay, so lower demand and higher costs.
Right. And third, there is tariff disruption.
Which complicates the global stuff, right?
Completely. It complicates the international export and import of global alcohol brands. It just adds another layer of cost and logistical friction.
That sounds like a mess.
It is. And finally, changing consumer habits. People are just altering what they drink and when they drink it.
You know, it is kind of like two wealthy collectors bidding up the price of a rare vintage car at an auction, precisely because the broader everyday car market is slowing down.
Oh, that is a really good way to put it.
Like, everyday cars are struggling with supply issues or whatever, but a rare global alcohol brand is a prized asset right now.
Yeah, exactly. Building on that vintage car analogy, imagine trying to build a new classic car from scratch today while navigating all those industry headwinds we just talked about.
That would be nearly impossible.
Right. Trying to establish a new global brand right now means fighting tariff disruptions and elevated packaging costs head on.
So it's just easier to buy an existing one.
Exactly. If you are a major player, paying a premium for an already established, highly recognizable global franchise is just a safer bet. They're basically placing a premium on scarcity.
Let's talk about the direct beneficiaries then.
Yeah.
Based on the analysis, who are the immediate winners from this headline?
The direct takeover beneficiaries are Brown-Forman Class B, ticker BFB, and Class A, ticker BFA.
Okay, so the company itself.
Right. Having multiple interested parties naturally pushes takeover expectations higher.
Because of the auction dynamic you mentioned earlier.
Exactly. With Sazerac exploring a deal alongside Pernod Ricard, the added interest increases the odds of a richer valuation discussion around the Jack Daniel's franchise.
Okay, but the research also points to other companies acting as winners even if they aren't the ones being bought.
Yes, they do.
The notes use the term valuation re-rating. For someone listening right now, could you explain what a valuation re-rating actually means?
Sure. So it happens when the market decides that a certain category of asset is worth more than previously thought based on a new benchmark.
Okay.
When buyers show they are willing to pay a premium for a rare global drinks asset like Brown-Forman, the market starts viewing other U.S.-listed branded beverage companies as strategic assets in a consolidation cycle.
Oh, I see.
And the research lists Constellation Brands, ticker STZ, and Boston Beer, ticker SAM, as the premium brands that could benefit from this re-rating.
So if buyers are willing to pay a premium for Brown-Forman because traditional alcohol growth is slowing down, where did the growth actually go?
Well, that brings us to a totally different category of winner.
Right. The notes mention companies that do not sell alcohol at all. How do they fit into a story about a whiskey company buyout?
It comes down to changing preferences. There is a separate demand trend at play here.
What kind of trend?
Health awareness, weight loss drugs, and just changing consumer preferences in general. These are pushing people toward non-alcoholic alternatives and energy drinks.
Okay.
So the alternative winners named in the notes are Monster Beverage, ticker MNST, and Celsius Holdings, ticker CELH.
Wait, hold on. Energy drinks?
Yeah.
Do energy drinks really belong in the same conversation as premium spirits like Jack Daniels?
I know it sounds odd, but the research clarifies that they represent the alternative destination for the consumer's changing habits.
So the money's just moving over there.
Exactly. Even if deal excitement lifts alcohol stocks momentarily, the longer-term consumer trajectory strongly supports these functional and non-alcohol beverage names.
Okay, so if capital is flowing toward buyout targets and energy drinks, someone has to be losing out, right?
Unfortunately, yes.
Let's guide the conversation toward the alcohol names lacking a takeover catalyst.
Right. So if investors decide the real value in the sector is only in premium global spirits brands with M&A appeal, other alcohol names may lag behind.
Just on a relative basis.
Yeah, due to the broader industry's slowing demand and cost pressures that we talked about.
So who are the losers in this specific context?
The notes list Molson Coors, ticker T8He, and Boston Beer, ticker SAM, as losers here.
Wait, hold up. You just listed Boston Beer, ticker SAM, as a winner earlier. How can it be both?
It is a great question. The research breaks down the nuance here. SAM wins if the market broadly re-rates all beverage assets.
Okay.
But SAM loses if investors decide to exclusively reward companies with an immediate M&A deal story.
Because they don't have that active buyout catalyst right now.
Exactly. Without that catalyst, they get left behind in a market purely focused on immediate deals.
That makes sense.
Yeah.
Now that moves us to the final category of losers in the notes.
Right.
Beyond just lacking a buyout catalyst, some companies are facing an actual drop in consumer volume, right?
Yes, weaker volume is a real issue.
Which is separate from the M&A stuff.
Completely. The notes detail that younger drinkers are pulling back from beer and spirits in some markets.
So they are physically buying less liquid.
Right. And investors may punish alcohol stocks where the underlying volume story looks less attractive regardless of what the M&A sentiment is doing.
Who are the volume losers named in the notes?
Constellation Brands, ticker STZ, and Molson Coors, ticker TAP, are named here.
Okay, so Constellation is another one of those dual exposure names like Boston Beer.
Exactly. And the factual breakdown concludes by mentioning the companies tied to traditional drinking occasions.
Because traditional habits are under pressure.
Yeah. If the trend of healthier choices remains the main driver after the Brown-Forman excitement fades, these names will stay under pressure.
Got it. And who are those companies?
They specifically name Anheuser-Busch, InBev ADR, ticker BEUD, and Molson Coors, ticker TAP.
Wow, okay. Well, we've covered a ton of ground from these research notes.
We really have.
We looked at the direct winners, the re-rating candidates, the functional beverage alternatives, and the names getting left behind by the M&A focus or the volume drops.
It is a very transitional time for the sector.
It definitely is. And that brings us to our final thought for you, the listener, to ponder based on the notes today.
Okay, what is it?
Well, beverage alcohol companies are trying to restart growth during a difficult period shaped by healthier choices.
Right.
So, as a listener watching the markets, you have to ask yourself, will this burst of takeover excitement successfully mask the decline in traditional drinking occasions, or are we just seeing a temporary premium placed on a shrinking pie?
That is the big question. And just as a reminder, this is not financial advice or buy or sell recommendations. This is purely the opinion of the author.